Welcome to Entrepreneur S.O.S, where we help business owners navigate the often complex world of entrepreneurship. Each week, we share expert advice or real-life experiences from successful entrepreneurs who have faced and overcome the challenges of building a business. Whether you're just starting out or looking to take your business to the next level, this is the podcast designed to help you. So, join us each week and let's grow your business together. And don't forget to subscribe and leave a review. It helps us reach more entrepreneurs just like you. And today we are talking to Omolola Adekeye, and I hope I pronounced that right, is an attorney and wealth strategist who helps women take full control of their financial journey. She's the owner of True Values Global Corporation, which is a holistic financial strategy firm. And as a business owner, she brings you her passion for a peaceful, wholesome life. I love that. Her business is based on gratitude, compassion, and success. And we sure need a lot more of that in the world, especially with finances, right? I think that is such a great combo.
I know.
Today we are going to talk about to incorporate or not. That is the question. So Omolola, welcome. So glad to have you here with us today. And I'm just going to hand over the mic to you because I'm sure there's a lot of information out there. Some people say incorporate right away, don't incorporate, wait till you reach a certain point. There's so many variables.
Thank you, Sandy and Monique. I'm really grateful to be here with you guys today and share a little bit of what I know with your audience. I think it's very critical and important for us as entrepreneurs to really know what's out there, what can be of benefit to us to help us grow and flourish. And there is a lot. We are in a blessed land. I don't see any other country that offers the amount of resources and help grow businesses and to flourish in that direction that the US does. For me personally, my school of thought is have a firm foundation. That is how I see being an entrepreneur. Whether you're a stay-at-home mom doing her baking business and you just started out, okay, yes, we have different forms. There's the sole proprietorship, there's the limited liability company, there's the S Corp, there's the C Corp, there's the general partnership. And you know what? There's also the family trust. All these are the different types of entities that are available for us as entrepreneurs and individuals to use to grow our business. And the key is understanding that a lot of times these entities have to play together and not just by themselves. Is it okay to just have a sole proprietorship when you are maybe making cookies out of your home? Maybe not. It could be the best way to, okay, let me start and put my name out there, but you're making cookies. I mean, there could be some liabilities involved in that in the future, and you want to protect yourself. The key to structuring businesses for me is really understanding asset protection and maximizing on your time.
So I have a question because all over TikTok, there's a lot of this wealth talk. And I didn't understand the trust thing. And I would love for you to maybe demystify having the trust and what that looks like and why people want to have a trust.
Very well. Now, I studied law. One of the things I could not stand in law school was estate planning. Here's the thing. I started in my journey as an entrepreneur and understanding that there are different layers to everything. I finally saw the need and the reason why we have estate planning in the first place. And it is such a great tool, not just to protect you from maybe probate, which is one of the major things that the trust does. The trust is a living document. It can get an EIN. It becomes you. It carries out your instruction. You want it. So that means Omolola Adekeye Incorporated is not going to die if I die. And if I have employees that are depending on me, I'm able to continue the life of the company because I have left instructions in my trust. As opposed to if I did not have a trust and nobody knew what to do at the point of death, it's going to incapacitate a lot of things. A lot of people may not be able to get paid because of that situation. So that's one key thing. It allows for the continuation of business. That's one thing. The trust also protects your asset. It gives you the opportunity of controlling everything, but literally owning nothing. So you can have your trust own your corporation. And that forms another layer of protection for your assets. Yeah.
So your trust is its own entity. So it might be like Mull Trust. And then underneath that, it would be whatever my business was in a corporation or an LLC, or can it be a sole proprietorship?
Yeah.
Like, does it have to be a corporation, or can it be a sole proprietorship? Will it still offer that amount of protection?
So the trust offers protection most very strongly for the corporation and your LLCs. In every organization, let me put it that way, you have to have the corporation and the LLCs because they each have different benefits that they bring to the business owner. And then the trust allows you to protect those assets. It can be the sole owner of the corporation, and you, the owner, and those running the corporation become the board members. So that way, the trust protects that corporation. And then when it comes to the LLC, it can have maybe 10% or 20% membership in the LLC to ensure its continuity again and protection. And then you as the managing member can have maybe the rest 25% and another person 20%, which gives you a multi-member structure. And especially for the LLC, that's very important because they want to see a multi-member structure to be considered doing business. When it's a single member structure, there's no protection, number one. Number two, you're regarded as a sole proprietorship or a disregarded entity. And the tax savings from that are very minimal. When you're able to present as LLC with a trust protection, you are able to now take the maximum benefits tax-wise. Yeah.
So let me ask you this. At what point would somebody have a trust or even incorporate? Because let's say somebody's just starting a business and they don't really have any major income. At what point does it actually make sense also financially to either incorporate, have a business, and then a trust as well? Because from my understanding, and I know nothing about this subject, so this is maybe a very stupid question, I was always under the understanding that a trust is something that you have if you have X amount of dollars.
So thank you so much for that question. No question is ever stupid. This is the reason why I do this, and I say I serve women. We need to be open and be able to talk about these things very freely. You can set up a trust as soon as you want to. The trust is not a protection for just the uber rich or those with a lot of money. The trust helps really to save a lot of time, energy, and expense, so that when you're beginning to protect your asset, you're beginning to live that legacy, and you're beginning to make things easier for those left behind to manage. It helps to manage everything one has, your bank account, everything. So anyone can get a trust, not just a will, but the trust also at any point in time. Now, the beautiful thing about the trust is it can get an EIN. That means what? It is recognized as its own individual. So let it do more for you. Let it do more for you if you're a business owner. If you're not a business owner, great. Still get the trust. Still let it do its stuff so that when people need to access funds, when one passes away, they're not going to jump through the hoops to do it. My mom passed away in Nigeria like almost 5-6 years ago now. I said to her, have you done your will? I don't have anything. It's the professor telling me she had nothing. And when she passed, I'm still dealing with stuff.
Wow.
She did well in some instances, but just helping that process through so that we don't have to spend money with probate help. Now, as a business owner,
I just got to say something. She's absolutely right. When my mom passed away, we had a trust created. Now, the lawyer didn't do it correctly, but it got passed through anyways because it wasn't our error, it was lawyer error. But make sure it gets filed. Make sure you have it. It made everything easy. My brother was able to continue paying things out of bank accounts. And the process was, I think it took less than a year, I think almost to the day that everything was done and filed because we had that trust in place for her as an individual. I have a little bit of a question that's a sidetrack. When you say it can have its own EIN number, does the trust also then get a double tax benefit for you on top of the, say, corporation? Does it have any tax benefit versus just being incorporated? I'm just curious about,
yes,
since it
yeah,
can be its
thank
own
you.
entity.
It can be its own entity. It is taxed at the highest tax bracket. So you don't want to have it funded. You don't want to have it funded unless it's absolutely necessary. And as a business owner, you have other better vehicles. Let it do the protection. Let it do the continuation. As a business owner, that's what you need. Your tax advantages will come from your LLC and your corporation doing business together. That's how it comes.
Thank you for clearing that up, because I think that's a question that people don't understand when we hear all this trust, incorporate, LLC, and then LLC should own that LLC. And you're like, what's the point of the trust then? And you just basically explained it to us that it's there to protect the assets and allow us to continue on whether we're present or not with ease.
Exactly. Yeah. But you can get the tax benefits from having a corporation. I know there's always the talk about double taxation, but that can be minimized or not even exist at all if we understand that the corporation is a fixed fiscal year. The LLC runs from January to December. Tax years, they're very critical. It means that there's a lot we can do that we're allowed to do if we know how to for our payments. And the beautiful thing about it is that I found very beneficial to me, which was the reason why I've done so much study on this, is the fact that I couldn't get the maximum benefits from using my home as my office and even as an S corp, because it was still passed through. The profits I was making are dividends, personal taxes from my S corp. However, with the corporation, I can have my trust on it. I can give myself fringe benefits. I'm able to have a family LLC, which is private, and rent that to my corporation. And therefore, my home, my cars, my furnishing become capital assets.
I had a corporation for 17 years as an S corp, and it didn't own the house. We didn't have it specifically do that, but it did own the vehicles. It owned the cell phone. It owned everything in my life, basically, that I used. And then I didn't use it. I didn't pay for it. And it was done, like you said, in a tax deductible way. So we were able to maximize things greatly by corporation. I mean, I have a funny story, and it's crazy because there's like fine lines within it that you can utilize the tax code, and that you see so many of these people taking advantage of doing so. And one of the things that I saw again that is running around the talk is that you could, I think it's 14 days a year, you can rent your entire home back to yourself at a specific amount per day. And then it's completely a tax write-off income. Like you don't have to claim that income.
Okay, so again, a lot people say all sorts of things on TikTok.
Exactly. I want to know some truths here.
Okay, I don't know about this, but I know. And I just want to go back to Sandy. Let's go to the basics. When you want to start a company, and let's say you want to choose an LLC, please do not have just one person be the member of that LLC. That's the key thing here. When you're filing for your EIN with the IRS and they ask you that question, if you put one, you are a disregarded entity. And that just means a sole proprietorship. And that just means you're not going to be able to get the maximum benefits of all the hard work you're putting in. So if you want to get the benefits of all the hard work, let's structure multi-member LLCs from now on. That's the message I would really love to pass across. So all that on YouTube, all that you see on TikTok, hey, just go online, register the LLC. There's a whole lot more that goes on with that. Make sure you have the kind of documentation to show that you are doing business, not just the EIN or the corporate or the articles of organization. Doesn't make it.
So you say that if you have an LLC and get an EIN, there should be 2 or more people. But what if I'm like, do I just pick a random person off the street and say, do you want
to? So that's where your trust comes in. That's one person.
You're going to have a trustee for your trust.
Yeah.
So there's going to be someone that you're going to put the head of your trust if you were to pass away.
Yeah.
So could you do like your daughter?
Yes. Yes, you could do your daughter. So the very basics, that's it. The very, very basics. Now, to the question of what can you deduct and all that good stuff, 14 days. What I know is that when you have a corporation and you also have your family LLC, and the fact that you're hinging everything you're doing on the premises that the corporation can give fringe benefits to its board members.
So hold on one second. Is there a difference between a family LLC and an LLC?
When I say family LLC, I'm talking about a private LLC. It's the same thing, but that LLC does not do business with any other business except the corporation. By renting out the household to the corporation on behalf of the board members.
So we can hierarchy. We have the trust up top, and then you have your corporation, which is your actual business. Let's say you're baking cookies, right? It's your cookie business, right?
Yeah.
And then let's just say there's another leg. You have 2 legs. And on the other side, you have your family LLC, which is you, and then whoever maybe is the trustee, correct?
Correct.
And then that is responsible for what to the LLC. So people can understand that structure.
Okay. So the LLC and the corporation have a management agreement, a business management agreement. The LLC does like bookkeeping and all this kind of stuff for the corporation. So you create all these documents to establish a business so that you are justified to say this house is for and the corporation rents. There will be documentation to show the rent so that your mortgage that you're paying on your property or your rent, if you're not paying the mortgage, becomes capital asset, becomes part of what you can justifiably deduct. It's all about the paperwork. It's all about presenting it in the fashion that is expected. So that way you're not waiting for any 14-day rule or anything. It's laid out clear and you can do it for the entire tax year.
That's like great information because I can just see people, our audience, probably like their little brains turning like, oh, I really need to get a hold of this woman and talk to her because I do not have this set up. I have a corporation or just an LLC and I'm on my, I think most people it's by them lonesomes. They're just like, I'm going to go get my LLC. And I know I made that mistake, but then I realized it was a sole proprietorship. I'm like, why am I still getting taxed in the sole proprietorship? And I'm like, because I didn't get a second person.
And here for me is the benefits of a sole proprietorship. Your corporation can do business as 1,000,001 things. Instead of always trying to set up an LLC every time you want to extend the arm of the corporation, do it as a DBA, but use the same EIN of the corporation. You're saving quite a bit on the filings and all that in doing. That's where the sole proprietorship that comes in and it's very essential. Or maybe you have the 3-legged system as we described. And for instance, I have a teenage son, he's 18, and we're talking, said, oh, Mom, I think he's going to be a senior next year, but he's already thinking about getting his real estate license and all that good stuff. And I said, fine. Or the other time he was talking about doing selling t-shirts. And I said, that's a business we can attach to the corporation through a sole proprietor, through a DBA.
So I have one more question. I'm going to have a million more questions, but we can always bring you back, Omolola. But I do have one question. A while ago, I had been thinking about an LC and talked to a million people, and you get a million different opinions. I live in California. It's incredibly expensive to incorporate here. So I know a lot of people that say, well, go to a different state, do this, do that. What is the word I'm looking for? How legal is that? How, is it something that you would advise? Is it something that you say always incorporate in the state that you're in?
There's a lot of people like, oh, Nevada, because
Nevada.
Nevada
Okay,
that's like
so
the
here's
big one. But there's a lot of, I've learned for myself, depends on the state you're in. Because for me, North Carolina, there's like this law where it doesn't matter. You still have to pay your dues if you live and reside in North Carolina.
every state is different. That's the beautiful thing here, again, of the US. But you know what? The corporation and all the benefits it has is a tax thing. So if you're properly structured, we've helped quite a number of people in California, especially, get properly structured because of this, of how high things are there. So you want to play both ends. You want to play the LLC and the corporation with your trust and let everything play together for you. That's the best way to get around it. It all depends on the type of business one is doing. We have Nevada, Wyoming, Texas, and some other states offering what is called the Series LLC. And that plays a good role for those who do a lot of real estate. So they're able to have a master LLC and have, because it's as to protect the assets, to keep everything separate, it's always beneficial to have every property in its own LLC. So in that way, for instance, if I have a client in Georgia as property in one of these states, or we feel it's beneficial for them to open the Series LLC and maybe it's Texas, and then open a foreign business here. It all depends on the strategies and what is really beneficial to that particular business. So it's not that it's illegal. It is very legal, but at what expense? It may not really be the best way to go for me, a consultant, or me who just wants to do flowers. But me who has a real estate, it might be.
And you have holdings all over the country. That would make sense.
Yeah.
What about like for someone like Sandy and I? So I'm in North Carolina. She's in California.
Yeah.
It's uber cheap to do an LLC in North Carolina or incorporate, way cheaper. Would we be better off basing that business out of North Carolina versus California just due to the tax benefits,
Yeah.
et cetera?
Yes.
That would make sense. Yeah. So when you have partnerships, that would make sense.
So what if you have multiple businesses? Do you have to have multiple entities, business entities?
Great. That's what I said before. You could convert your main LLC to a corporation to elevate the tax benefits, and then do DBAs that work with the corporation. Do it that way. It all depends on how you establish. For instance, I have a client who is a medical doctor in South Carolina, and the way she's set up, she also has some real estate. So we have a main corporation, and she has her business that when she started was set up as an S corp. We left it at that, but we still have her do another corporation, and then her home is one LLC, and we have another LLC just doing business with her corporation because of all the equipment in the office. And then we have her real estate. So it really just depends on what's going on with every business owner. But the major thing is, even as a small business owner, you can still get the benefits of owning a corporation as long as we can layer it with a private LLC and your trust.
And there are obviously a lot of ways to liaise with an LLC. It could be that, like you said, it could be that you're renting the equipment from the corporation, or you're in charge of the equipment usage and rental.
And the corporation could employ you as a 1099 for you're doing fixtures in your own home. So it's such a wide and, I want to say, beautiful experience for those who are able to take themselves a little bit outside the box and really explore.
I have one quick question, because we actually just had this conversation at dinner on Friday, because I have a friend who makes a lot of money in sales as a W-2 employee. And he said he paid $72,000 in taxes. I said, boy, you got to get incorporated. And he's, how do I do that? And I said, you need to set it up so that have a business that you can funnel. But he's making all of this money as a W-2. Is there a way to kind of work that together as maybe a lasting question? Because I think there's people out there that have a good job. And then they have this little side hustle, and can they somehow mesh the two together so that the side hustle can reduce their taxes as an employee?
It depends on a lot of things. We've actually debated that question quite a bit also amongst those I know who do this a lot. Is that solely a W-2?
It is. It's solely a W-2. He gets base commission, but it's all W-2.
It's all W.
It's base plus commission, but it's all W-2 from what
unless there's a way he can have them convert him to a 1099. Then he can go the business route. Without that, it's really not possible.
Yeah, I think the reason people don't do that with the golden handcuffs is because they lose their health insurance. A lot of times their 401k,
so
all the benefits get.
Those benefits that they have, their corporation can now give it to them. And then they can do what their employers do and match it and get the benefits off matching it. They can do all that for themselves. And then I have a friend who is also a W-2, but has a side business and has a rental. And that's one of her greatest questions is, how best can this help? It helps because your corporation takes out of your mortgage payments, out of what your W-2 is reporting. So that's one of the ways I can quickly remember. But then again, you have to look at how much you're really making from the side.
Yeah. Any final thoughts? Because I think this topic is endless.
My brain's blah.
I know. It's fun.
I don't know about you, Sandy, but I'm so intrigued by this. I have gotten sucked into the talk of this because I'm like, how can I save money? Because I think everyone's in their head thinking, these really wealthy people are paying like 0 in taxes. And how are they doing this? And the middle class W-2 is getting suckered into 36% in taxes. You start to begin to ask yourself, what can I do to save this? And this is the start of the answer.
Yeah.
And I was going to say, I'll be in touch. I have 4 billion other questions, but like I said, we don't want this podcast to be 6 hours. However, if you're open, we'd love to maybe have you back because I do find this fascinating and I just don't know enough about it. And I've pretended not to know for way too long. And I'm at a point where the timing was perfect. So thank you so much.
I am so happy.
And all of her information will be linked in the show notes. So if you want to reach out and get yourself set up correctly, she's happy to do it.
Yep. So we'll have all that in the show notes. And if you resonated with this talk and want to have more of these good banters and talks, then subscribe and share it with a friend if it's helped you. So thank you so much and have a great day.